Good morning, everybody. Hey, welcome to Tuesday, April 12th. Yesterday, we did start out the market with a slide, and we'll continue to see what happens today. I'm hoping we're going to get a bounce. Dave and I will talk about that and more here in just a few moments. Before we do that, though, folks, let's just remember that there's only one thing that any of us can control when it comes to the market, and that's how much risk you have. And the issue I see day in and day out is that folks don't really realize how much risk they have in the portfolio and how much it really doesn't line up with the amount of risk they want to take. Give me a call, because that's why we developed the core retirement design, to help you understand and navigate the risk in your retirement portfolio. And give us a call at 863-382-0037. And we'll sit down and have a core retirement design the retirement you always dreamed of. With that, we got Dave coming up next.
Michael Jackson is there. It's 8:40 now, 20 before 9. Oh, not that one, that one. There we are. Time check in on your money, although we could use a horn blast or two here because the inflation figures are out and they ain't good news. Let's look and see what's going on Wall Street with Phillip Statler from Statler Financial Services. Phillip, good morning. How you doing?
Hey, good morning, Dave. I was thinking we were off to the races, and it definitely sounded that way at the beginning, didn't it?
Oh, boy, did we ever. Well, yeah, yesterday, just to set the table as to why we're talking the way we're talking, the Dow was down 413 points, Standard & Poor's was down by 75, NASDAQ was down a rock-crushing 299, and it all started about the time the White House press secretary showed up at our podium and said, boy, the inflation figures tomorrow are really going to be El Stinko. It's going to be terrible. You're going to hate it. And, well, investors listened to it. We sold the snot out of all of the indexes, didn't we?
We really did, man. I'm telling you, the Dow, I mean, everything just kind of shedded any hopes of any green ink yesterday. And now, just to give you some idea, that throws the NASDAQ into a 12-month low. It's down 3.5% right now for the year. Last 12 months.
When your White House spokesman says head for the hills, folks have a tendency to listen whether you like the occupant in the White House or not, right?
Oh, that's right. I mean, when they start crying wolf, people are going to listen because they're supposed to be get the front running of some of those numbers.
Yep, and what it was as much as anything was it was political posturing, because we knew the inflation rate wasn't going to look good with the upticks that we had in consumables during the month of March, and this was diminishing expectations, so it wasn't going to be quite as much of a shock this morning. The shock that she was trying to insulate us from, the CPI. Month over month in March, the overall consumer price index was up 1.2%. All in 1 month. We used to have annual inflation rates that size.
Yeah, exactly, Dave. And I, before we went on there, I asked you to do a little multiplication, right? So multiply that times 12, because that's 1 month's consumer price index. If we get 12 months of that, man, it is going to be not a good thing.
Well, we are just merry sunshine personified this morning, aren't we? Here's the data dump in total out of the government. 1.2% CPI increase last month alone. In fairness, once you take out gas and food, which in fairness, you take those out because those prices are capable of going down and up wildly. The more stable one, the number was up 0.3%, which in fairness is the smallest number we had since in September, but it still gets us to a core consumer price index increase year over year of 6.5%. And once you include the food and gas, 8.5% annualized overall inflation rate on the consumer price index. And I'm sorry, in a given week, I'm primarily buying just gas and food, so that's where it hurts the most, doesn't it?
Absolutely. So you're just so right, Dave. That is, those two things, fuel and food, are you can't live without them, right? So those are the two main things that all the consumers out there really look at. We can do without some of the other stuff, but those core things we can. The food and the gas can be an issue as we look at the numbers.
I make fun of always taking out, elective stuff like food and gas out of the equation, but the core number at 6.5%, that's a more stable number because generally when those prices ratchet up, once you get rid of things like food and gas that vary up and down across the year, that's an increase in prices overall that ain't going to change. When food and gas settle back down, probably we're looking at the cost of living in general being up 6.5%, 7% year over year, even after this quote unquote temporary spike in fuel costs.
You're right. And that also gives us a little concern, right? Because if that ends up being the core number, that's a pretty big number. We're not used to that kind of number, and it's going to put pressure on our economy.
Absolutely, and and explaining, there was a good rational reason why the White House decided to try to prime us yesterday for us. We're only a few months away from the November elections. The Democrats are concerned about getting shellacked off of what the bad economic news is in November, so they want to diminish expectations. And I would assume, we're probably hoping for a little bit better than expected number on the CPI this morning, so that they could say, "See, it's not as bad as you thought." Well,
yeah, they didn't really get that though, did they?
Yes, it's just as bad as we thought it was. Real wages, by the way, went down by 0.8% when you adjust for inflation last month. So, folks, you lost a full percentage point yesterday on your buying power as well.
Yeah, and the other, and I think that's my wife and I were actually talking about that this morning. We talk about minimum wage going up, but if inflation continues to go up, which the raising wages does automatically increases inflation, that it's just a self-fulfilling prophecy, right? If we raise wages, then prices have to go up to compensate for that, and it just continues to be this big cycle.
Absolutely. Among the announcements as planned today out of the White House to combat inflation, President Biden is going to release the restrictions on E15 gasoline. Now, they normally say during the summer months they don't let them sell 15% ethanol gas because of concerns that it produces more smog. We're going to keep selling 15% ethanol gasoline through the summer months, which is fine because it's going to cut back some of our imported oil. But at the same time, ethanol is a fairly well subsidized industry in this country because of the way we developed it, which means probably more government spending in ethanol subsidies. And I'm not 100% sure with inflation that's something that's such a good idea either.
I was thinking the exact same thing, Dave. I'm thinking, I'm not sure which is better, paying more for corn or paying more for oil, because we're paying it either way. Our tax dollars are going to supplement some of the ethanol production.
Yeah, and I will admit I'm a rather rabid advocate of ethanol, but at the same time, given the way we developed the industry by a heavy government subsidy program, I'm not sure we need to pump more money out of the federal government and put more money into circulation while we've got a high inflation time anyway. So while I'm happy to see any measure that means we import less oil, I'm not necessarily happy to see it resulted by having more government money pumped into the economy, where, quite frankly, with the inflation the way it is, we need to kind of bite the bullet, take our castor oil, and live with it at the moment.
Yeah, I think you're right. I just saw a headline that said that these numbers we're talking about, these consumer inflation numbers, are the hottest we've seen since 1981.
Jeez.
Yeah.
And the market's responding. I mean, the indexes aren't looking all that bad, but it does mean we're starting to buy a little bit more on the bonds in order to stay on the safe point. Treasury yields, the 10-year bond is down 5.6 basis points. The 2-year Treasury bond is down 7.8 basis points, which generally means that the guys with the serious money to spend are in the process of looking for a safe haven for the moment until they see what's going on.
Exactly. They are. And so, we've been talking about bonds here lately, and we are getting a little bit of relief on the 10-year, but as soon as volatility kicks back in, we'll see it go the other direction.
Yeah, that inversion we've been talking about isn't as bad as it has been. The vibes are yielding a little more than the 10s at the moment, but nevertheless, it's still slightly inverted, and it does look like the smart money is not necessarily heading for the doors, but hedging a portion of their nest eggs in order to make sure that they can keep what they've got.
They are, and we continue to watch that. There are so many different headlines out there that are going to start to affect what's happening in the marketplace, and And the economy's won earnings as we continue now to get into the second quarter, or really the first quarter earnings season, to see what the earnings have been the first part of this year. I think that's going to give us another read on what companies think is going to happen this year.
Absolutely. The big ones start coming out tomorrow with the financial. I got one of my tidbit sheets talking about how one of the primary macros that they're going to be looking at is going to be operating margins, how much you're actually making off of what you sell too, which is going to be an interesting thing to watch. Before the banks start coming out, though, we got a few reports this morning. CarMax came out early, didn't they?
They did. CarMax came out early. They missed for the quarter when it comes to earnings, and I'd say it's a substantial miss. They were supposed to, well, at least Wall Street expected $1.25 a share. They came in at 98 cents a share, so a miss there. Now their revenue did top forecast. They've been able to keep their average selling price up. The only thing that's starting to fall is that the sales volume is starting to fall because prices are up. So, but that's got CarMax down 4% this morning.
Okay. I was going to say that actually adds up to make sense because used cars are selling at a premium right now with a shortfall on the new ones. So they're starting to price people even out of the used car market these days.
It definitely looks that way. And I think the other thing is probably adding to that is interest rates going up. That means, they've been spending on their credit cards instead of actual cash. And so that's putting some pressure on things like cars and appliances and things like that as well.
I got you.
The other one I have is Albertsons Supermarket. They did beat by 11 cents a share. Revenue was above projections. They say they've been able to effectively deal with increased supply chain and production costs, but they are trading down this morning. So there must be something else in the long version of the report that I'm not seeing, down almost 3% this morning.
I would imagine that's probably going to be price control expectations that Albertsons can't even control what their prices are going to be given what the supply chain looks like.
Well, that's true. We talked about that happening in Europe, so we don't know what will happen here.
Absolutely. Resetting the table for the morning. Off day yesterday, basically talked down by the administration, trying to insulate themselves from today's inflation report. 45 minutes before we open, Phillip, what are we looking at this morning?
Well, right now we are looking at some green ink, Dave, across everything that I can see. The Dow is up 0.6%. That's $211. The S&P 500 is up slightly over 1%. That's like $46. And the NASDAQ 100 is up 1.75% this morning. That's $245. And let's don't forget the Russell 2000 today, up 1.3%. That's like $26. So everything is having a heyday this morning, as well as the commodity side of the fence as well. Silver up 2%, gold up 1% this morning. And the other one's up too, Dave. Crude oil up 3.9% to $97.98 a barrel.
The good news is it looks like it's leveling off a little from my delayed quotes because my delayed quote on crude oil was a little higher than that. So I'll take what small favors I can get. The overseas markets, Asian Rim was generally up at the close at 6 a.m. this morning. European markets are off fractionally halfway through their day today. Keeping tabs on one's retirement account is important, especially right now during a time where that money you're getting out of retirement funds is shrinking. How do I make sure I protect my nest egg and make sure I can retire comfortably, Phillip?
Dave, that's one of the reasons that we developed the core retirement design so that we can help people design the retirement they always dreamed of, allowing them to know how much risk they have in their current portfolio. Give us a call at 863-382-0037 to have your core retirement design. And then check out us this weekend, the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here with hopefully some good news tomorrow morning at the same time on Light FM. Phillip, thank you so much. We'll see you then.
All right, man. You have a great day, and we'll go look for some good news.
Do appreciate it. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, I want to thank you for joining us. It just goes to show that you don't know what the numbers are going to do to the markets. Inflation up, markets up. What does that mean for your retirement? Give us a call. Let's walk through all your core retirement design. Make sure that your risk matches up with your portfolio. 863-382-0037. Have a great day. I look forward to speaking to you again tomorrow. Take care.